Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options.
Fibonacci ruler from the swing low, here we go, now we're back in business, to the actual high, 81.86 here, 80, let's get the right high. Bear with me, 83.95, we want 83, well, that's close enough. What I'm looking at is that people that will use Fibonacci may come to the conclusion that the market is coming close to the 618, the golden number. We are coming close to a 618 Fibonacci retracement level. Not only are we at a monthly pivot support, folks, this actually coincides because last month's data has nothing to do with the numbers to crunch from last November's low to this June's high in the euro currency. All we've seen is we're looking at a pullback and a correction, and the market may come back up to, at the very least, we may pop in the euro currency FX index just back up to maybe these moving average values around 76. So another 300 points. And that almost kind of supports the opposite analysis that we just did with the Euro FX spot index. So just looking at the market from two different perspectives, the fact that we have different forms of market analysis using seasonal studies, using historic studies, what did the market do? Does it adhere to its seasonal studies? Has it been adhering to its seasonal studies in recent history? You know, just because it definitely looks like it has been adhering to its seasonal study doesn't mean it will. So we have to employ the right option strategies or possibly, as I say, a combination of option strategies where it will give us time for the market to provide the trade, or at least for the trade to mature, as we like to say, and to see the market perform in accordance. So you got to give the market time, obviously, for the market to move, and then you need to be positioned in the market in order to profit from that potential move. So in looking at this, we definitely see some opportunities coming across and how we can go through and devise an option strategy, or at least a trading plan accordingly. So that's, I thought it was kind of interesting to note that to come here and to be introduced on this day to do a presentation, that we're on an anniversary date of an annual, or at least from a historic standpoint, a seasonal tendency of market reversal. So there we have that. Now I'm going to go back to our main menu if possible. And
you all right, John?
I'm trying to go back to our PowerPoint presentation. Let's see if I did it.
I think you did.
Oh my gosh. The boy's all grown up now. The only thing I need to know, Steve, is how do I get the entire window formation back?
Those little icons below, you got to keep clicking on the little icons. There's like 5, 6, 7 of them.
Yep, these guys?
The little ones on the bottom right, like all the way on the bottom, 2 to the little, I guess, be the second one as we go out from right. Yep, there you go. Was that me doing that?
No, it's me, I think.
Yep. And then if you click on the one next to it, or that just tells you who's joined, and then there's a question mark. You get the question.
All right. Well,
you okay?
I think so. I think this will be good. I just don't have the where I move the box or move the slides advance.
Let me see if what was it?
I'm sorry to do this to you, everybody. My bad.
I think you should see. Do you see everything now? I actually turned it back.
Perfect. All right.
Okay.
Now, before we advance, I just want to make sure everyone you can see this. We're back to the seasonal chart.
Yes.
Awesome. Thank you all very much. All right. So in order to determine a situation, I think we got to look at the market and say, okay, it has a kind of a neat adherence to supply-demand functions. Obviously, if a market goes up, there's more demand than supply. If a market goes down, there's obviously more supply than demand. So that's something that we see through the foreign currency markets, either by use of multi-conglomerate international corporations shifting monies back and forth, or U.S. governments moving monies back and forth, or investors moving monies back and forth. And I think one of the things that occurs as we enter the end of a fiscal year, governments close their books and begin a new fiscal year, and of course we have end of quarter, we have quarterly window, positioning going on, and so there's a lot of monies that can flow around. And so as we enter into earnings season in the weeks ahead, I think we're going to have more possible disruptions in the opinions of those who now believe, now that the market, believe it or not, now, today, right now, there are people who have changed their mind that the stock market is of good value and you should be entering long in the stock market up here. And that's just the way of the world. No one likes to buy value. People like to buy high and sell low sometimes. But in any event, I think that with the euro currency, same type of situation. It just goes from one extreme to the other. I don't think that you're going to see a market just go parabolic without some type of correction or at least a breathing. So, it's kind of nice to take advantage of these moves, and before you do, ask or look and do a little bit of homework. Does the market adhere to these seasonal tendencies? Has it in the past? What is the percentages that it have? We did this little book called the Commodity Trader's Almanac, and I co-edited it with Jeff Hirsch, whose father, many of you may know, wrote the Stock Trader's Almanac. And one of the products, the first things that we put in the Commodity Trader's Almanac, I said, listen, we got to do currencies. People are into currencies, and there are some substantial seasonal price moves in these foreign currencies. So we did add it several years ago, and so now more and more people are becoming more savvy to this phenomenon, and I don't think it's truly out there because not a lot of position traders are using the foreign currency markets. Not a lot of speculative position traders. Certainly, it from the audiences that I poll, not a lot of individual traders if they're trading stocks, they really don't look at foreign currencies as an investment vehicle, and they certainly don't look at options because they're trading stocks. But here at the ISE, they have the solution to that. They have the EUU, which is the Euro Currency Index, or the Euro Currency Spot Index, and they have the EUI, which is the Euro Currency Index. So either if you want to trade one or the other, you're just going to go trade an inverse relationship, or you're going to trade along with the spot cash price that you can hear on the news. The chart in front of you, the seasonal pattern that we're looking at, is based on the spot prices, so that it's where the market would track the EUU. So we're expecting a correction, and so therefore we're looking for the market to go down. That means the EUI is going to go up, and the EUU would go down. And if we're right, then obviously we're going to have some money, skin in the game on it. And if we're wrong, we're going to be able to minimize our risk and at least have the knowledge of what kind of risk goes into the game. And I think that's really key, is then at least knowing what your risk factors is before you get into the game.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.